Hi, in this video we will learn about the differences between capital and revenue items. Capital items could mean capital expenditure or capital receipt, whereas revenue items could mean revenue expenditure or revenue receipt. We'll start with capital expenditure. The benefit of this expenditure extends to more than one accounting period. Examples: when you purchase fixed assets such as land and building, furniture, sports equipment, sports material, library books, billiards table, etc., the benefit of this expenditure extends to more than one accounting period. Similarly, purchase of government bonds or fixed deposit in bank, which are examples of investments, are also examples of capital expenditure. Next, we'll go to capital receipt. These are receipts that are not revenue in nature or are meant to be used for a specific purpose. Examples of such capital receipts: life membership fees, contribution towards restricted funds such as building fund, match fund, prize fund, etc. Special receipts, donations received for a specific purpose. Legacies, where the amount is to be used for a specific purpose. We've learnt a few new terms while learning about capital receipts. Let's look at them in detail. Life membership fees. It refers to a one-time payment made by a life member of a not-for-profit organization in order to avail services all through his life. Next, restricted fund refers to funds the use of which is restricted either by the management or by the donor of the fund for a specific purpose. For examples, it could be loan fund for pursuing higher studies or fixed asset fund such as building fund meant for investments in fixed assets. Next, special receipts refers to receipts of amounts for special occasions such as contribution for annual dinner or for governor's party. Finally, let's understand the meaning of legacies. They refer to amounts received as a donation by a not-for-profit organization under the will of a deceased person. If the amount is to be used for a specific purpose, then it becomes a capital receipt. We had a look at what is capital expenditure and capital receipt. Now let's have a look at what is revenue expenditure and what is revenue receipt. Revenue expenditure. The benefit of this expenditure expires within the current accounting period. Examples could be wages, salaries, rent paid for factory or godown, insurance, printing and stationery expense, repairs of fixed assets, upkeep of ground, electricity bill paid, telephone charges paid, honorarium, subscription to newspapers and periodicals, cost of medicines or stationery or postage stamps consumed, depreciation on fixed assets, and loss on sale of fixed assets and investments. A new term was introduced here, honorarium. Let's see what it is. It refers to payment made to a person for services rendered by him to the not-for-profit organization. Finally, revenue receipt. These are incomes received by an organization during the process of carrying on its activities. Examples: subscriptions received from members, entrance fees, admission fees received, donations which are used not for a specific purpose, grants from government, income from sale of old newspapers and periodicals, proceeds from concerts, lectures and dramas, gain on sale of fixed assets and investments, locker rent, interest received, rent received, and dividend received. Subscriptions refer to periodical payment made by members of a not-for-profit organization in order to keep their membership alive. On the other hand, entrance fees or admission fees refers to the amount paid by a person at the time of becoming a member of a not-for-profit organization. So in this video, we learnt the difference between capital expenditure and revenue expenditure, and also the difference between capital receipt and revenue receipt. This is very important because it is based on this concept that we will be able to identify items which come in the receipts and payments account, income and expenditure account, and those that come in the balance sheet.